Hey guys, how are you? Happy Wednesday. Please give me the okay that you can hear me well, that you can see the screen. And then we will begin. All right, perfect. Thank you very much. Wonderful. Hi, Moti, Ahmed, James. Thank you very much, guys. All right, so let's begin. Then let me open the report. Where is my report? Here we go. So the market is in slower mode this week so far. There are a lot of what's to catch up with, of course. Several pairs are developing the what we call the next expected moves. Several others invalidating the views and the current cycle structure, expanding the developing of the structure as it is in the corrective mode, like the Aussie Kiwi, which I will cover in a second. And let's go over the update and see what and where do we stand with. So let's start from top to bottom. Aussie franc, our bullish view expecting the double wave correction remains on. We discussed about that on Monday and also Jordan yesterday. This, let's just change the colors, this divergence on the current 4-hour chart scenario is a good place to cash out partials. And the reason for partials and not full is because we are still bullish on the daily and the weekly time frame. And as long as this is the case, and as long as the rising trend line holds, the view remains bullish. But we don't want to wake up one day with a random reason move crossing through all these levels and the rising trend line, and therefore this was our original view, right? And therefore, once we get the divergence against, it's a good time to enjoy from partial cash outs. The rest keeps running, does not change. Next one is the Aussie versus the Kiwi, where we want to see deeper two waves corrections and then buy the retraces. The reason for that is the structure that we had on Monday was activated, and basically this triple double activated by invalidating the trend line and breaking below it. So the bullish view here failed, and basically the question is what's next. According to all the cycles from the higher time frame, nothing changed because the expectations are still bullish. However, going back to the daily cycle to look for the confirmation, we are coming back to the idea of a triple cycle to the upside, which might go into deeper correction towards this zone, right? And if that is the case, then the first leg and the correction would have to be cycled by themselves on the 4-hour chart. And this is exactly what we got, right? And that's why currently the Aussie versus the Kiwi, by breaking below this structure, possibly developing the second leg to the downside. Therefore, on the short term, aggressive mode, because it's against the higher time frame cycles, the idea here is short term sell the rallies. Invalidation for that would be one of the two scenarios. First of all, the break above the falling trend line Why break above the falling trend line? Because this is the trend line that represents the ABCD correction from the daily cycle, right? So break above that out of nowhere would invalidate the bearish short-term view. Second invalidation is the dynamic 61.8 Fibonacci of this bearish structure, which is seen on the 1 hour chart. Why the 1 hour chart? Because this is the developing 4 hour chart leg, and it has to be cycled by itself on the 1 hour chart. And if we suddenly cross above the 61.8 in one straight leg, it's also invalidation. Now, you know the rule, right? When things happen, they tend to happen for the around the same levels, and when we put 61.8 on the current drop and the trend line, you would figure out if we suddenly go up, that's pretty much the same zone. So that's basically the invalidation that we need to pay attention to. And the view here, short-term retraces, further continuation down towards the area of 38 to 50 of the daily cycle. Keep in mind this is more aggressive, therefore smaller risk, but it is fully supported by the 1 hour chart by making these cycles. So sell the rallies here could be definitely a good attempt. Okay, so this is the Aussie versus the Kiwi, which now develops the structure and provides this opportunity. Next one on the list, and then of course once it's completed and we get our deeper two waves, we are going back to the buys. This is expected to be completed divergence by then. Still has time, so that's all. Next one of the Aussies is the Australian versus the dollar, where we want to go and look for the buy retraces. So it's currently in play. We are waiting to see any good, interesting setup that could be a bullish hidden divergence. Of course here, anywhere. It could develop simply two waves as a correction, or it could make any very welcome or not so welcome some pattern structure and then further breakout. Okay, so we are on the same view. Look to buy retraces. Currently no real setups derive on the on this correction from this correction, and we are still waiting for that to structure and build up. Since we are trading the weekly and the daily cycle with the 4 hour chart, trading time frame, that's where we are looking for the setups, the 4 hour chart time frame. As for now, we don't have it, so we don't rush waiting for that to happen. Euro Aussie, sell the rallies was our plan on the 4 hour chart. So these rallies are building up slowly, right? And we want to go here and sell. Keep in mind that if this is a first leg on the 4 hour, it has to be what? Cycle by itself on the 1 hour. We definitely have this structure in play. It could be interpreted as a triple cycle or deeper as a special cycle. Doesn't really matter, as it stands for the same trending structure of lower low, lower highs. So two waves or any sort of range correction and then breakout, and we are good with the sells. Ideally, we should be exposed to these levels. And again, I say ideally because we already know Mr. Market is not Mr. Ideal, right, to here, and potentially clearance on. So that would be simply classical. If we can rally towards here, then break the trend line, and all the rest is history. So the plan remains the same. We are watching for the setup. The 4 hour is the one that has to make the correction, and because it's one leg and this is the corrective leg, they will have to be cycles by themselves on the 1 hour. So not much happening more than that. Same with the euro pound. We have the lower highs, lower low structure. So we want the setup to come. Here it's our first push, we might get second one, or dance a bit more in this range, and then looking for our next sells. Again, not much happened. You can see the moves are in very narrow price range. So unfortunately, nothing more that we can do here besides waiting, right? Not always, as you know, in market, there are conditions where we should trade. There are conditions where we should simply avoid when there is lack of synchronization. And there are periods when we're sitting on the fence waiting for the setup to build up. Sometimes it takes a day, sometimes it takes 3 days, sometimes it takes a week or two. But the most important thing to remember, if we, during all this period, as the setup builds up, keep clicking sell or buy, sell or buy, sell or buy, nothing will happen besides us making the broker super happy by paying more and more and more commissions. We never can make the market to move if we keep pressing buttons of sell, buy, or just setting orders. Basically, what we do in that case, we only just torture ourselves, right? Because, you know, as the position goes on, the emotions go on, and then we glue to the computer and the screen, expecting the price to move, but it's not ready to move because there is no setup. So next one is the euro versus the Kiwi. Sell the rallies plan. Same story. Retraces and sells. Not much going on here. We got a small retrace, a small continuation. I think it has the room to make deeper correction. And this or other way around, this pair is yet bearish from all the cycle view and the verification timeframes as well. Sell the rallies was and will remain the plan here. Excuse me just for a second, just to mute my, yeah, that's all. So the idea here, just want to remind you, is the triple descending cycle that we trade on the daily time frame with a divergence. Each of the legs verified on the 4-hour chart, and we are heading towards corrective zone of the cycle. Right? That's the euro Kiwi as for now. Next one, euro versus the dollar. Buy retraces plan. We got the structure here, and it's not only a structure of higher highs, higher lows, it is also a cycle by itself. So we want to see the corrective mode, right? Any sort of this, or like the Aussie, a range and a breakout. Until then, I would not be surprised if the moves would continue to be annoying, meaning a bit up, a bit down, a lot of confusions with such spikes. Is it up? Is it down? So I would not be surprised at all if this is just the first leg of a deeper correction and later on the buys. It has the structure, lower highs, lower lows in play. That could simply be deeper correction with the breakout further on. Verislav, on the euro dollar, isn't that a 4-hour chart bullish hidden divergence? Yes, it is, definitely, right here and also here, right? But you have to keep in mind one thing. Completed cycle should reflect with a corrective cycle. Corrective cycle building up in 2 waves or a range. Right now, it doesn't fit in any 2 waves, definitely not in a range. And that's why this is what I suspect to happen. It will fit in exactly like the pound Kiwi, which I will explain in 2 minutes. Okay, so you will see in a second. This hidden divergence basically hints you that yes, the trend is likely to continue, but because it's a cycle by itself, which you can simply use here, you expect a corrective cycle. And that's normally comes in two waves or a range and then the continuation. Does it change the buy plan? No, it does not. Okay, but also very important fact here, if you want to verify these divergence, you need to have two candles rule. You don't have the two candles rule, not in this place, so this cannot be high, and not in this place, so it also cannot be high. Therefore, this divergence by itself would not be really useful for you. Okay, I hope it makes sense. And that's why, like I promised, pound kiwi, we discussed about it on Monday. If you missed, I suggest to everyone to take a look. That was the first structure here, and it was looking like, oh wow, bullish divergence developing, and the 4-hour chart was developing a bullish hidden divergence. This is an obvious buy. So technically yes, but when we are talking here about cycle structures, and when these develop a trending structure by itself, then we are going, in the majority of cases, of course it's not 100%, just for bigger legs. Doesn't change the plan, just change the timing. Okay, so same pretty much happens with the euro dollar. Could we be wrong here? Of course. The market can decide, that's all and continue. And in that case, for those who trade price, for example, without setups, right? Just price, retrace to specific level, candle patterns, blah blah blah, hidden divergence, anything, just but purely based on price and not setups, not trendline breakouts, not convergences. Then the most important thing is the level of 61.8. Why? Because if it is a trending structure, you don't want to have one leg going below the 61.8. Okay, so that's two different approaches. And if you, but for the majority of traders, this would be pretty big stop. That's why waiting for a setup is the correct thing to do. Setup is what you can get here, right? A trend and breakout or triangle, some specific pattern that will improve your timing and your potential risk reward. So that's all. Now, for the euro, does it change the bullish view? Of course not. The only thing it does change is the expectation of deeper retrace before further continuation. Okay, so I hope it is clear enough. If not, I'll be more than happy to explain further in the Telegram group. Just raise up the question there. So that's covering the euro dollar, and now we are into the pounds. We have one pair so far with the pound. This is the pound versus the kiwi, and right now, again, we discussed on Monday this scenario, and right now we get this scenario. So right now it's first, second leg, developing hidden divergence that turns into the continuing. Each of the legs here verified on the lower time frame, right? First leg and the second leg. So we got here this, then a range, and now we get this. Each of them comes with bullish divergence, of course. Therefore, and the fact that the daily is still bullish, weekly is still bullish, break above the falling trend line here should be a good technical confirmation. So if we manage to break above that, the expectations would be to the upside. Keep in mind that this breakout, if happens, ideally you would want to see on the lower time frame making a bullish structure. So something like that, right? Breakout and building the new bullish trend conditions. Makes sense, right? If you want the bullish continuation, verify that the prices really create higher highs and higher lows for you, right? So just basically confirming the trend beginning. That's for the pound versus the Kiwi. Now, New Zealandian dollar. We didn't have any cycle here. There is no ending divergence in place here. So buy retraces is the plan for the New Zealandian dollar. Okay. And we didn't have anything on the 4-hour chart here. No bullish divergence formed. Which raised the questions. The question, could we get here deeper two waves? Or will we be able to get any range? Both answers, of course, remain in play. 4-hour chart not tradable yet. 1-hour chart is, because the 1-hour chart, where is my count? Where is my count here? The 1-hour chart is the only one that gives this higher highs and higher low structure. Of course, we can go in the special cycle idea, right? So the 1-hour chart could be tradable. The 4-hour chart wouldn't be tradable, and likely to assume we are going here for a ranging structure before the deeper continuation, or just deeper two waves and then continuation. Pretty much the same like the Euro Kiwi, Aussie Kiwi, and sorry, the Euro dollar, Aussie dollar, and the New Zealand dollar, pretty much the same. Sorry, don't know why I compared it to the Kiwi. So that's the New Zealand dollar. When do we expect any retraces to continue that to the upside? Once again, for those who do not wait for setup but just trade levels and retraces and levels, so every retrace is acceptable as long as we are above the 61.8 of this dynamic leg, because if we go one shot below that, it's a suspicious sign. Also, we have the rising trend line, right, which should be also as longer term invalidation. So this is it about the New Zealand dollar. Nothing really changes for us. Buy retraces was and remains our plan. Dollar CAD, sell the rallies is the plan. No rallies yet, no sells yet. So it's one candle retrace here didn't really provide anything. It's only the 1-hour chart, again, one shot, bearish hidden divergence, but I don't know, doesn't look like a super good risk reward opportunity. So waiting for some deeper retraces, didn't yet come, so still on the waiting mode. And the dollar yen buy retraces come in play here. We are building up the two waves, retrace, and a bullish divergence is developing. So the dollar yen, our bullish view remains on, expecting it to continue slightly further. As you remember, this two-wave cycle with the weekly 38.2 retrace of the double cycle. So this basically right here. Okay. That's from the dollar yen. Now, I've been asked a lot about dollar franc today. Are we into the sells already or not? So here is the thing. Dollar franc does have a convergence on the daily. Dollar franc does have the hidden divergence on the 4-hour. Dollar franc does not have a trading cycle. Why? Because this was a triple cycle to the upside, and this is double cycle correction, and it reached the 50%. So all the technical confirmations like the convergence, divergence, false breakout, all that is in play, no doubts. However, the target of the cycle was reached. So there is no tradable cycle currently in play. Yes, there are no divergences on the higher time frame that could support or deny any of the target's expectations. But if there is no cycle that has the room to reach the levels, this could become anything. This could become a range. This could become a pattern. And to try and guess will the lower time frame follow or not, I think it's tricky. Of course, I might be wrong, but my personal work is always when the directions of the divergences fit in the cycle. Cycle is the first definition, because cycles define levels for us. How much room we have to move until next point and so on. So dollar franc, sorry guys, for me it's a no-go. I might be totally wrong here, don't get me on specific view, but I wouldn't deal with that. And also I've been asked about the pounds. Should we be exposed to any other pounds, like the pound Aussie, like the pound franc, like the pound Kiwi, the pound CAD, sorry, and others? So my answer is again the same here. If you expose more, I have two. I have the Euro pound and pound Kiwi. If you expose yourself to more, there is no problem with that. The only thing you need to keep in mind is the total exposure that you plan to have would not exceed or expand more than your normal risk for a currency. So if you risk, for example, 2% for the same exposure to a currency, especially when we're talking about the same setups, then just split that between all the instruments you want to be involved with. All right, very, very important. So that's from the forex view. Again, not much changed. Aussie Kiwi is the one that allow us on the short-term opportunity. The other ones are building up, and we are talking about the majors: euro dollar, pound, euro pound, Aussie dollar, Kiwi dollar, right? All they are building up. Dollar yen, and the crosses: euro Aussie, euro Kiwi, also building up very interesting scenarios. Now, gold and the rest of the indices. So before I go to the commodities, I want to quickly cover the Ripple and the Ethereum. So the Ripple, which we were looking to go and look for buy retraces, still remain in the same plan. However, this is a too suspicious one-shot retrace. And even though it's still above 61.8 retrace, this is way too suspicious. So I have no clue how that could develop for a new low or just deeper two waves. But one thing is clear: when random moves like that happen, it's better not to be involved with. There is nothing technical here, and therefore simply going neutral. And same with the Ethereum versus the dollar, which unfortunately failed. That was the trend line that was in the play, and it failed by breaking below this low. As for now, game over, going neutral, waiting for other opportunities. So that's from the cryptos. Now going back to the commodities. Gold, as annoying as it knows to be, still stuck in the same structure, doing pretty much nothing. We are here in a flat move, a bit up, a bit down, a bit down, a bit up. Nothing more defined. Therefore, the plan remains the same and nothing else new to be done. Stocks. Our buyer performs a bit better today than the drop on the last couple of days. The plan still remains the same. We are holding and respecting the bullish structure, and we definitely need to break this high in order for that to become a bullish trend for the longer run. However, as long as we are above the rallying trend line, we're still in corrective mode, of the weekly cycle, right? So our expectations yet bullish. Okay. Let me check if I didn't forget any other. This is the invest, so we don't have any changes there. Cryptos discussed. Yep. So that's pretty much as for today, the update. The market is in slower mode on the first days. Don't forget, we had that 2 or 3 weeks ago where it started super slow and then boom, right? Everything started to move. So remember, patience is super important when you are waiting for the setups. Don't forget ever, if you click buy, sell, sell, buy, sell, buy, it will not change the market. It will only change the condition in your account, normally to the bad side. So if things don't happen, if setups are building, don't help them to build, let them build. If you draw extra line or extra resistance or extra pivot or trend line or whatever it is, it will not convince the market that it's time to move. It will only convince yourself why to press the button. So if there is nothing really in play and you find yourself without clear setups, don't draw extra lines. Let the clear setups happen, even if it takes 1 or 2 or 3 or 4 more days. We can't change the market. We can only change our behavior. Don't forget it, guys. We all wish we could change the market, and we all wish we might affect the market. But wishes alone, reality, totally different things. Questions about any of the instruments I covered? Any instrument that you want me to cover and it's not on the list? Maybe I have a view for you, so if anything like that, let me know. And if not, of course, as always, you can direct the questions in the Telegram group. And a bit later today, I will be there to answer the questions. No questions. Good. So, guys, have a wonderful evening. Enjoy the Champions League, some good matches. The NBA season is back. So, for all those of you who are into sports, enjoy the the games that it has for us. Have a great evening, and I'll see you around. Thank you very much for being here. Ciao for now.